Hi and welcome to the new European ETF Market Trends. We're here with Marlène Assine, Head of ETFs Research at Lyxor Asset Management, to review the market trends of November 2015. How would you qualify the flows for the European ETF market this month?
European ETF market flows were limited in November. Net new assets during this month amounted to 3.7 billion, minus 27% versus the one-year average. Total assets under management are now up 27% versus the end of 2014, reaching 462 billion, and this includes a limited market impact. Investors mainly focus on developed equity ETF in a market dominated by shifting expectations over the Fed's policy.
Did equity ETFs account for a significant part of ETF flows?
Inflows into equity indices at 2.6 billion accounted for nearly three-quarters of total market inflows. Backed by strong job creations with an acceleration in wage inflation, market expectations have shifted toward a Fed rate hike in mid-December. In this context, the emerging market flows rebound of October has been short-lived, with only 97 million of inflows and 390 million of outflows on emerging Asia equity. Investors have preferred to return to all developed market indices, with 2.4 billion of inflows, twice the level in October 2015. Flows on US and Japan equity ETF have rebounded, respectively at 785 million and 321 million. In Europe, flows are still limited, staying flat compared to the previous month at 667 million and mainly concentrated on financial and small-cap indices.
Were fixed income flows still sustained?
Inflows into fixed income indices have declined sharply at 930 million, or 57% below the one-year average. Developed market govies saw most of the outflows at 1.1 billion. In a context of strong divergence in monetary policy, with the US versus Germany yield gap at a record high, outflows mainly concern European govies at 997 million and also German govies at 354 million. Conversely, inflows on corporate and high-yield bonds rebounded to a total of 1.9 billion, 65% above the one-year average, fueled by the search for yield and in Europe the expectation of an increase in QE. Noticeably, inflation-linked bond ETF registered one-year record high inflows at 240 million.
So, finally, is there something to remember on commodity flows?
Commodity flows were positive for the second consecutive month at 153 million, with positive flows on broad indices of 146 million, whereas gold and precious metal saw limited flows of 7 million.
Thank you, Marlène. Thanks for your attention, and we will be pleased to meet you again early January for the full year 2015 review.